Alright, boys, let's get this started. Pretty important day yesterday in the market. You might be able to look back at that day and say, "Ooh, that was the day that the US dollar sell-off began." The point about yesterday is that it sort of confirmed that September's not going to be happening. Alright, so we had a little bit of some weak data out last week from the US in the manufacturing PMI. That was surprisingly weak, and that didn't go unnoticed. It slipped from a positive to negative, or from expansionary to contractionary numbers back down to 49. Now, in terms of impact, though, that was limited. All right, but then we had a little bit of a weak NFP, and the market's like, okay, well, we'll understand things are a little bit slower than we expected, but nothing's still changed. If they want to raise rates, they can raise rates. Then last night, it was released on Tuesday rather than on a Monday because it was a public holiday on Monday. There was the US Services PMI for August. It came out the lowest since 2010, the sharpest drop, since 2010. It fell down like 4 points. Now that doesn't sound like a lot. When there's nothing going on and your economy drops like that, that's massive. That's massive in terms of sentiment, and there's no way that the Fed raises rates now. We're talking like less than 5%. Probably down to 1 or 2%, unless they're forced to somehow. It's just not going to happen. So the US dollar got obliterated, all right, against most pairs. Most importantly, it got obliterated against the dollar yen. We're going to have a look at dollar yen in a second, and just want to make sure I'm not going to click things here. And dollar yen led the market, but the euro got involved as well. Now, euro rarely gets involved lately, but to get the euro moving means this is important. What's going on? So the paring back of the chances here that the Fed is going to be raising rates, the somewhat questionable outlook now of the US economy going forward has put tremendous pressure under the US dollar, and the chances of us not raising at all in 2017 is starting to skyrocket. If that comes to pass, then I feel that there's only one direction that we can get in terms of a new trend, because we've been waiting for a new trend in the market, and I think that's going to be US dollar weakness. It helps the pound trade. So we've been talking, pound. The pound broke key resistance last night, and it's on its way towards the post-Brexit high, rebound high. So let's have a little look at the post-Brexit rebound high. All right, we take 135. It's a little bit above 134.70. But this sort of resistance that the market found in last time is now the target for this next leg of this rally. There may be some volatility intraday because obviously we overbought short term because the market's just been going one way for the last week. But it's pretty evident last night after we broke the 133.70 that this is pretty serious. Now I'm looking for this market to come back and test this level. But there's a divergence now between the UK and the US. You got one where thought there was going to be a massive recession. The data's coming in stronger. And you got one where they thought, and the BOE is not going to do any more. And you got another one where the economy is slipping towards recession, and the central bank's pulling back from raising rates. So this sort of divergence trade is closing really fast in. And this could lead to sharp rallies. Just so happens this pair is as short as it's ever been in the market. Okay, so there's more retail shorts than ever. There's more full-time trader shorts than ever. More corporate positions hedged than ever. Now this sort of hedging, this sort of exposure to the downside that these people have bought, at some point had to be closed, right? All these short positions had to be closed at some time. Now most of the time, that sort of situation sets up a short squeeze, and people are asking, well, haven't we had that short squeeze from 129 all the way up to 134? Not with the positioning in this sort of market. Not when the market's at 134, the low for 30 years. This sort of pullback here, this sort of levels, The short squeeze that we're talking about is 1,000 pips. Okay, back towards 140. So yeah, the potential to keep on moving until we shake out those shorts is, now that we have that weak US data, it's crazy strong potential. And so I'm really in love with this trade. Now, hopefully it turns out well and we all make a bit of money. I'm actually looking to buy more on this dip. So it's pulling back now. We had some real data out, not some sentiment data. Had some real data out, and it was a little bit weaker than forecast. Not a huge miss. All right, not a huge miss, but I'm just looking at the chat room for the first time. What's going on here? Oh, Zakiri. Yeah, we'll get to Zakiri. We'll get to Zakiri. Yeah. So not a huge miss in the UK data, but is the manufacturing production numbers came in a little bit weaker. Industrial production numbers came in a little bit stronger. The biggest part of the UK economy is not manufacturing or industrial production, right? It's not 1850. It's all about the services sector, and that's what's most important there, and that's what we're going to be looking at, going forward. More importantly than anything else, and so this can be brushed off. The housing prices remain quite strong, down a little bit month on month, but off extremely high levels. So there's no crisis here, and there's no one pulling out the money. So far, it looks pretty much okay. So this dip should be bought. How deep it goes, it's hard to say, but it's important for pullbacks to happen in the market anyway, in any uptrend. And so I'm happy for this to develop. It's healthy for the market. I'm not in any way worried, but I'm not adding yet, right? I want to see some green before we add, but definitely looking to add. Right, there's a difference in that scenario, right? That's all right. So dollar yen dropped off a cliff. Now this is interesting. If the dollar yen gets anywhere near 100, I'm not sure how the BHA is going to stop it. This time will be the third test in 2 months, and each bounce is getting smaller, and the chances of the BHA disappointing is so real, and just so much that what can they do to stop it, right? If the US dollar is not involved in the dollar yen rally, I'm not sure how you stop a sell-off, especially if the euro wants to rally. Right, so imagine that these two are similar sort of pairs, right? Euro going up while dollar yen's going down. If the euro gets above 114 and starts to attempt to threaten to break out, all right, above that 115-ish level, I mean, these candles you can take away as being not serious. It was false breakouts, that came back down within a day or two. If this US dollar gets more serious in the sell-off and the market does break sort of 115-ish, and we look like we're moving towards 120, it's so hard to see the dollar yen holding above 100 while US dollars getting sold everywhere every day. It's just, it requires the BHA to do something amazing, and they're running out of tricks. These guys have been keeping the yen weak now for 3 or 4 years, and they're getting pretty inventive. There's some debate they legally can buy foreign bonds, which is a big thing that got the market excited last week. So that means maybe there's going to be nothing at the next BOJ meeting on September 20. So let's keep an eye on this. This is much more US dollar story than the yen story, but technically if we break 100, it's going to be hard to stop, and it's very important for the whole complex. Right, for the whole US dollar complex, what happens here. And today, what you saw in Asia, and it should be noted that this is very bearish. Japanese usually come in and do some counter trend trading after a move led by the US session. To get a straight off sell off at the start of the Asian session is very weak price action. Yeah, very rare, very rare. And I've traded dollar yen for years, right? There's always crashes in dollar yen. Oh, dollar yen's fallen back because stock markets and dollar yen is related. And if the US is in charge of a move in the dollar yen, the US session, always there's this rebound in Asia. Very rarely is a continuation led by the Asian session, and we got one yesterday during the Asian session. So today during the Asian session, depending where you live. So this is noticeably weak for me. I'm like, wow. Even the Japanese don't want to touch this. None of the corporates come in to buy. No one's supporting. This could potentially get messy. Now it is making it a little bit harder on our crosses. Okay, so we had been looking at pound yen. I still like it, but there's no reason to rush into it. All right, there's no reason to rush into this trade. If the dollar yen's not going to be involved, then you might get really nice levels. Over time, it's probably going to go higher, but it's got not a clean path, whereas the pound's got that clean path. So just leave the pound yen alone for a little while. There is tempting to buy this pullback, right? But I'm just going to see what happens here with the dollar yen. In a world where the pound's on its way to 140, but the dollar yen's on its way to 95, you're looking at pound yen even lower than 136. So let's just back off that. Alright, so what everyone's talking about in the room is Aussie Kiwi. Aussie Kiwi's broken into fresh year lows and is looking incredibly weak, and it's all exciting because it's getting towards levels it's never been to before. And look, it is contrary in my view, and it is wrong right now that that Aussie Kiwi's a decent buy. I bought at 105, I bought at 104, and I was like, well, okay, if the market falls, I'll buy more. I'm not buying more. Okay, I'm going to sit here and just wait this one. No rush on buying more. The divergence between the Aussie and the Kiwi is as strong as I've seen before. I mean, they're both going the same direction. Just the Kiwi's kicking ass, right? One of my colleagues at work, Kiwi is snapping necks and taking checks. This rally here towards 75 is just relentless. It comes on the back of breaking the 73.50 resistance that we've held for all year, and that's led to this continuation trade, but no pullback, nothing to slow down, and we got some really bullish news last night. So we were saying that dairy auction was going to come in strong yesterday in the update. It's up 18% last month. How much is it going to go up this month? Futures say at least 10%. Come up like 8%. Now, not as high as some expected, but still very strong. So now it's up 24%. So their main export is up 24% in 2 months, in 6 weeks actually. So this is becoming a pain trade again. So the pain trade is real, and the potential for the parity test is becoming even more real. Alright, so I'm not buying any more until I see some price action which I agree with. I'm going to hold it just to see if we do turn around in the next 100 pips. It does look like the test parity is on. Now, does that mean that parity is going to break? Maybe for a day or two. Alright, I may have to add some funds on this one because I'm 2.5 lots short, which is long, which is not nothing. It's it's 250,000, even though it's Aussie Kiwi, right? So it's not real big pip sizes. It's still going to require a couple thousand to protect this. The level underneath parity, if it does break, things will get a bit interesting here. It will get to the stage where the RBNZ is probably going to threaten intervention. If it gets below parity and looks like it's holding there, the whole trade here, the whole divergence trade, is that the RBNZ is going to cut again and the RBA is not. Now, one of the big banks, Goldman Sachs, came out suggesting that the RBA is done now. That was noted overnight, but this has not stopped this trade. This trade is more to do with the Kiwi itself than the Aussie, and the Kiwi itself is in a huge rally mode, and also there's a fair few stops being hit here, and a lot of people getting stuck long. Okay, so have I seen this sort of trading before in the Aussie Kiwi? Yeah. Alright, I've been trading Aussie Kiwi for a while. There was a pain trade back in 2013 and I remember thinking about buying it around about 115. Okay, and then the market came back up. We're talking to a few clients about it, what's happening, and then it just collapsed all the way to 105. Does it have the ability to go much below parity? Not easily. And I think it might be a little feature, like, remember in 2016 when Aussie Kiwi went below parity? Yeah, it might get to like 98 or something like this, right? But with the RBNZ already threatening intervention, RBNZ already pricing in 1 to 2 more cuts, the chances of going too much further before its interest rates are the same as Australia, meaning that it's an equal playing field out there, is a little bit limited. Okay, we don't want to put downside limits on trades, right? So we're looking very long term here. This is at the highs when the Aussie was 110 and the commodity boom was on. This is at the lows when the dairy boom's on and the commodities slumps dairy's rebounding and commodities are crashing. We're relatively all-time lows anyway. All-time lows are rather words. Fuck. It's commodities in Australia like the iron ore price and copper have fallen substantially, and even if they've rallied 20, 30, 40% this year, that's coming off such a low base that it's still not anywhere near the levels you're getting for iron ore back in the day. We've still got at least 50% more to go. And so look, we're not earning as much, and that's true, but we're a much bigger country than New Zealand. So this sort of price action is definitely bearish. There's no way around it. I'm not going to sit here and tell you that buy it safe. This feels like, in the scenario that we're going to test parity, this feels like that scenario. So if you can't handle this pullback, you got to get out and wait and reevaluate. You can just buy again later, right? Take your loss and buy again later. Or be a stubborn fool and go to war. Go to war with me. I'm not looking to buy anymore. I know my exposure. We'll see how it plays out. It's more important than looking at the Aussie Kiwi to look at the Kiwi itself. So the Kiwi itself, if we want to know when they intervened in the end of 2014, and they did it after the market had already fallen for a few weeks, was testing sort of the support as the market was coming up. A little bit of support. All right. Was testing this sort of trend line. Okay. They intervened here for a good 300 or 400 points, and then they told the market they're intervening. Okay, and then that just helped break some major technicals, helped the market move. The RBNZ, one of the things that they said about intervening, and this is important, they're only going to intervene when the market is already in a position to go down. Alright, so they'll wait for the Fed to be raising rates, or to be the market to be in a mood where they're at least listening to that idea before getting heavy in the intervention market. They probably learnt that from the RBA, where the RBA tried to push against the Aussie as it was going to 110 and they just couldn't do it. Alright, so it's best to wait until the market's technically a little bit under pressure and then snap it to break it down. Right now is the worst time they could intervene. They might warn about it, but they probably wouldn't do it. So we're still a ways away from that. Right? We're still a ways away from that. We're talking if parity breaks on Aussie Kiwi, that they'll get that. Aussie Kiwi is not a big deal for Australia. Aussie Kiwi parity is a huge deal for New Zealand in terms of their trade partner. We're the biggest trade partner. They're a little island next to us. We're the biggest trade partner. If the Aussie Kiwi breaks below parity, then they're basically a really super strong currency, making it harder for the economy to rebalance. So it's real. It's like what they call a trade weighted index, right, of their currency. That's what the RBNZ is worried about. Not so much New Zealand against the US dollar. That's the artificial thing that we trade. Alright, so just keep that in the back of your mind too. Well, that's a rant and a half. So yeah, be careful. The market looks pretty weak. It's potentially going lower and quickly. But I think that's the end, right? I think that's the low of the decade coming up. So that's why I'm interested in buying. I'm not interested in buying for 100 pips or 200 pips. I'm interested in buying for 1,000 pips on this particular trade. Now, I want you guys to hold me accountable for that. If I buy at parity and we go down to 98 and then there's a sharp rebound and that's done, and RBNZ starts cutting, RBA stops cutting, and we move back towards 110, and you see this stream later in December and you're saying, where's your Aussie Kiwi, and I cut it early, then you know that I failed in this mission. So I want you to hold me responsible on that, guys. New Zealand's biggest trade partner is China. I've read that too. I wonder what they mean by that, though. Alright, because that... Alright, there's no way that capital flows between Australia and New Zealand are not the strongest, right? So we're talking everything. Maybe if pure export, it's New Zealand's biggest partner is China. But in terms of money coming in and coming out and who they do business with, New Zealand's biggest partner is Australia for sure. Yeah, so you can think of it more of a state of Australia than anything else. But yeah, I mean, obviously exports to China are very important. That's why when you had that scare about contaminated milk products from New Zealand, that's what hurt the Kiwi so much. A lot of what China buys from New Zealand is not milk. It's milk powder, baby formula stuff, right? But it's got a good name, so it's in demand in China. So yeah, I'll find out the exact for you guys. I don't want to give you the wrong words. But cross-border investment flows and such is definitely Australia and New Zealand have the biggest relationship anyway. But yeah, maybe we don't buy much stuff off them. Just giving it to the Kiwis. Alright, let's have a little look at some of the research. See what some of the banks are saying about the Aussie Kiwi trade. We read last night Deutsche Bank's calling for parity, but they've been the most bearish of all the banks, and they're not an Aussie bank, so I want to get some research here on the Aussie banks. We'll see what they have to say, and make a little I mean, just sort of get the feel as from the analyst world what they see happening next. I mean, it's not going to be easy, right? Even if the straight fundamentals between the two countries are suggesting that Aussie Kiwi fair value's gone lower, it's definitely not at 1. And it's a lot about momentum. It's a lot about positioning and the market getting caught long. But yeah, the threats from the RBNZ intervention is real. So I want to see what... They should be starting to produce articles about it. And definitely if we get closer to Aussie Kiwi, we're going to read more and more articles about that. So let's have a little look what's out there today. But let's not lose focus here on the pound or the euro or the dollar yen either. These are all very good trades to get in. Pound's back at a nice buy level as well. Alright, so the US dollar sell-off is going to be a bigger story. The Aussie Kiwi's just a sideshow, keeping us entertained while the potential US dollar big move happens. That's a picture of Jenny. She's trying to kill us. Trying to kill us with the Aussie Kiwi selling. guys. So the US dollar sell-off is going to be a bigger story. The Aussie Kiwi is just a sideshow, keeping us entertained while the potential US dollar big move happens. That's a picture of Jenny. She's trying to kill us. Trying to kill us with the Aussie Kiwi selling. Alright guys, let's have a little look here. That's a picture of Jenny. She's trying to kill us. TRCB. I just knew you were going to say something there, mate. I knew you were going to say something. I just wanted to see reaction from Jenny. I'm not I'm a married man. Jenny's a married woman. This looks like more of a monthly wrap-up than anything that we can get anything out of. I do want to check the technicals on Kiwi just for a sec, and the pound. I want to see what they think the resistance is above 135 is. Yeah, Kiwi search time, blah 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 blah. If you're watching this over in the YouTube channel, come over to Forex Signals. Get access to the chat room. It's a free site. You can ask questions. We can look into particular trades. Alright, so this is the... No, they're just making up stuff. So the feed levels come in 139. The 38 at 136.40. Okay, so 136.40 is achievable very easily. The pre-Brexit low 138.36 and 140 obviously held a couple of times as the polls were coming in and out. This is the bad boy that we're looking at. No, I'm from Sydney, but I know a few Kiwi traders are in here. I know a few Kiwis are in here. We taught them how to play rugby and now they beat us. So the 50% retracement of the big fall all the way from the highs to the lows is coming in at 673.56. 73.36, sorry. Alright. Okay. I myself are looking more towards 77 as the, you know, sort of top out of this sort of rally from the Kiwi. It's just a beast, right? It's just a beast. It's hard to say, oh, I don't want to get caught short the Kiwi on the US dollar. Things about that trade which piss me off are the relentless attitude of the Kiwi, and the swap rates are the highest in the market, or the majors anyway. So you have to pay heaps to be remaining short Kiwi. The yield that it pays, you know, that positive swap, is half the reason people get involved in the long side. And especially as the market's stock market's pretty stable. There's no risk in terms of that risk off capitulation trade at the moment. And so it's hard for the Kiwis to get sold off sustained at the moment. So it's like every dip's being bought up. And it's been like that for months. Same with the Aussie. Every dip's being bought. And the US dollar side of it is just not working. So, I mean, if the US is not raising rates, then I don't think the US dollar side of it is there. And so Like even with the Aussie Kiwi trade, I'm looking for the Aussie to rally, not for the Kiwi to sell off. I think everything's going to go up against the US dollar. It's just what speed. Alright, so yeah, Kiwi's still got some distances, some big support, big resistances, but let's see how it plays around 75 just to begin with. Now, Euro Pound is our favoured way apart from the Pound US dollar. So this is the second most favourite trade that we have going on. And we've got a fair bit of it. Let's have a little look. We're selling, okay? Let's make it clear. If I wasn't in the market, I'd be selling now. Okay, if you want to wait and see that 84 holds, or you want to get a bigger retracement, then you can wait. It's just this pair is pretty. It's got a lot of gravity on it with this pound recovery. So if the US dollar is going to get sold off and the UK recovery trade is real, then this pair is going back towards 80. So I want to get a fair bit of that. Obviously the pound must be under pressure. Okay. It's still falling. Alright. Then let's not freak out. Not freak out. Yeah, so it'll be bad if it breaks back under here, but I'm still bullish medium term, still bullish. Yeah, maybe not the next 24 hours if it breaks under here, but I'm still looking to buy dips, guys, so nothing's changed so much. Just a little bit of weak price action. Yeah, well, that's hurting a fair few of these pound trades, but let's see how it begins. Alright, where were we? Getting distracted. Alright, that's the text done. Alright, so this is Deutsche Bank's little view here. Just let me have a little read here. The New Zealand dollar continues to outperform, semi-unstoppable as we make new yearly highs. Hard to argue with the price action, but will likely force the RBA's hand at some point soon. Yeah, okay, so nothing new. Nothing new. These reports on the Aussie Kiwi are probably going to come out tomorrow, guys. I mean, imagine you're working in a bank and you're in the FX side of it, and something like the Aussie Kiwi breaks to fresh lows. You're getting told to make a report on that. We're just looking for New Zealand reports. New Zealand reports come in early morning. Alright, so tomorrow we're gonna check. Alright, there's nothing today, but there will be special reports on the Aussie Kiwi coming out any day now. That's just what happens when the market makes new lows. And also tomorrow we have the ECB. Now I'm not sure if I'm trading the ECB. will be a snooze fest, I think, but we might be doing a live event. I'm gonna have to check with Will about that. You don't sell Aussie Kiwi just because Jenny's selling Aussie Kiwi, all right? You're gonna get stuck short 102.60. Don't be selling Aussie Kiwi, Mau. How do you say your name, mate? But we'll look at some of that research tomorrow. We're going to look at how the pound develops. I will find if I'm doing the ECB live. I'm doing the ECB live. Excellent. All right, so we'll be streaming through Draghi's speech. We're going to have him up. We're going to have a chat about what he's saying. There could be a little bit of a surprise if they extend the QE. I've read a bit of research today that the QE might be up for extension past March 2017. If he does that, that would be a bearish surprise for the euro. If they do nothing, then perhaps the euro can just use that as a catalyst to continue its rally against the US dollar. I'm pretty much in the park of them doing nothing at the current market, but we'll see how that plays out. Momo, okay. But we'll be back. Now, that's a little later than the normal stream. So look at the live stream schedule if you want to see when it's coming out. For me, it's 9:45. For you guys, it might be a little bit different. So just check that with the live stream schedule. But if you're watching this and you just don't want to think about times, you know what time I normally start. It's 9 GMT. Then we'll be starting at 11:45 GMT. All right, guys. Is there any questions today? I focused a bit on the ISM, but this is pretty big, right? We could be looking back and saying, oh, that's the day when they took rate hikes off the table in September, and the US dollar broke and the dollar yen fell, and the euro started its rally. Hopefully that is the case, right? And in terms of how important it was yesterday in that data, I can't stress enough how big, certainly shutting the door on the Fed hike chances in September was. So if you're buying the US dollar, be very careful. That's the final word of the day. All right, trade safe, guys.